I mean, any advisor who's trying to grow their business, and that's virtually all of them. Many of them struggle with, how do I get new clients? What's the best way to find new clients? And I would say, you know what, you just have to help people in a way that surprises them. You have to have that discovery process and that I'm really going to look out for you process that actually makes them think, this is different. This is not what I expected. This is fantastic. And then they're going to push clients to you. As simple as that.
Welcome to the Future Ready Advisor podcast. I'm your host, Sam Sivarajan, wealth management consultant and behavioral scientist. Join me and my guests, from industry experts to top advisors, as we explore the pain points that financial advisors face, how they can solve them, free up their time, and make their practice future ready. Hi, everyone. I'm Sam Sivarajan. Welcome to today's episode of the Future Ready Advisor. Today, I'm here with Bill Bell, a senior financial advisor and author. Bill is someone I highly respect as a very thoughtful commentator on the industry and as a tireless advocate for his clients. He is here today to talk about the role of financial planning, the importance of a good, robust discovery process, and the future of advice. Bill, welcome to the show.
Thank you, Sam. It's great to be here.
Great to have you. So let me quickly introduce you and give the audience a bit of your background. Bill Bell is the founder of Bell Financial in Aurora, Ontario. The firm is built on his unique vision that speaks of values, relationships, and dreams. Bill is also the author of 2 books on financial planning. In a prior life, Bill was a high school maths teacher. He brings that rigor and warmth to his clients and practice. He's published more than 100 articles on a variety of topics, including wealth management, financial planning, insurance, and observations of the human condition. All great ingredients for a really great conversation, Bill. So I'm looking forward to this. So maybe we can dive in. I'd love if you can share with us a little bit about how your practice has evolved and about your business philosophy.
Sure. I think, first of all, one of the most important or pertinent details with respect to my background is prior to starting Bell Financial, I spent 11 years with a disability insurance company, essentially selling a single product. So that's how I came into the financial services industry. And I was the single product was disability insurance, by the way, but I was pretty good at it. And I spent the last 5 years managing Canada's largest disability insurance brokerage office. So my role there was to convince advisors and then their clients to buy disability insurance. And something about that always nagged at me. And that was that I was never quite sure that the client needed what I was selling. Is this the best thing for them? Has the advisor gone through a whole list of things that they might consider and landed on this? Or is this just a product to sell? And so, that's primarily the reason I left that position. And I started Bell Financial and realized that I had to take the exact opposite tactic. I was going to first explore everything I could about a client, figure out what their situation was, and then make recommendations. And because of that, Bell Financial was founded on the principle, or one of our guideposts was, we're going to do a financial plan for every single client. And I think more than anything else, when people say, what has led to your success, I would say it was that decision and my commitment to following that. Now, over the years, our practice has evolved a lot. We've gone from MFDA to IROC to portfolio management. We've grown considerably, but that has never changed. We always do a financial plan with every client.
And I think that's an interesting comment that you make, Bill, because when you would have started using financial plans as a guidepost to your practice, that was pretty revolutionary back then, wasn't it? It wasn't something that was a matter of course for most advisors in the business.
No, you're absolutely right. In fact, when I came in, I joined Manulife and I said, I'm going to be a financial planner. What are your financial planning tools? And I think they had to dust something off and say, well, I think we have this. Like, why don't you try that? So, yeah, I was definitely in the minority. And I would say that over the years, that's 27 years ago now, over the years, it's clear that more advisors are doing financial planning. But Sam, you and I both know we're still far from the majority. And even those who say, oh, yeah, I do financial planning, very few do a financial plan with every client that walks in the door.
Or comprehensive,
Sure,
to
absolutely.
get a
Yes.
full picture, etc.
Fair enough. Fair enough.
I think that's a great point. One of your recent posts that I read and that I really liked, Bill, was titled Setting Sail. In it, and I think it's the same theme, you talked a bit about financial planning and how it has evolved over the years. You also discuss uncertainty and happiness in the same article. And I think these are more esoteric, but I think are very important themes as well. So, can you expand on all of that?
Sure. Sam, when I started that article, I really was wanting to write a commentary on AI and how it was going to impact our business. And somehow my mind drifted into my favorite subject, which is happiness. And I was like, okay, now I'm into no man's land. But as you saw, something came out of it that I think was valuable to comment on. I think an interesting perspective from that thinking that went on when I was doing that article is to consider two extremes in financial planning world. So think on one extreme, there's the left brain, very analytical. Everything has to be exact. Everything has to be precise type of planner. And we have those planners. We have people like that. On the other extreme is the very sort of goal-oriented, optimistic, don't worry, the universe will provide person who believes that, hey, as long as you set goals and you convince yourself that they're achievable, which is what the planning tool would do, then you're good to go. So there's the optimist and there's the realist, or the practical. They're both, it's so easy for both of them to poke holes in the other's argument. Like, it's ridiculously easy. And the reason for that is because they're both wrong. Life is lived somewhere in between those 2 points. We have to deal with the fact that we create financial plans that are going to be wrong. There's nothing about them actually that's going to be right. But we also have to help people understand that if you move towards your goals, life's great. It might not be exactly what you imagine it, but it's going to be great. I think the best way I can summarize that is to say that happiness, I think, is found in this really simple formula. You have to expect the best and accept what comes along. And that's why happiness and uncertainty come out in the same article that I've written, because I think that's fundamental to being happy and to living a great life.
I couldn't agree more. I might add, for your what you've just said, I would say that maybe one other thing you would add is prepare for the worst, in some sense. And I don't mean that in the negative, worst place connotation, but part of planning, I think, is involving hoping for the best, but being ready to kind of take the curveballs that life throws at you. I think part of a lot of the philosophy that I read and everything, I think part of what seems to be the zeitgeist today is that happiness is this kind of end in itself. And I think there's a lot of research, a lot of writing that talks about the fact, along the lines of what you say, that happiness is a byproduct of doing the things that you are doing or you should be doing. It isn't the destination, it's the journey, if that makes any sense.
No, I agree, and I would argue, and that we could go down a rabbit hole here, but I would also argue that happiness is a choice, and right, and so, and I like, I don't disagree. Planning for the worst is part of what any financial planner has to do. You have to prepare clients for this could happen, this could happen, this could happen. Oh, negative conversations. You need to be prepared to accept those if that happens, and it's better if you're kind of prepared for them. But I'm still, I'm the optimist. I tend to be on the right brain end of that spectrum that I described. So I have tended to help clients focus on the bright light at the end of the plan, as opposed to the darkness that could occur. But in either case, if you can accept what comes along, you've chosen happiness.
I couldn't agree more. So one of the discussions that we've had over the years, Bill, is the importance of the discovery process. So in my doctorate research, one of my findings was that clients really valued and, in fact, expected a much more detailed discovery process. Without putting words in your mouth, what are your thoughts? Can you walk us through your own discovery philosophy and process?
Yeah. First of all, I strongly agree, Sam. I think you know that. I think that the discovery process is where most things happen that are going to, that's it's the start of a long relationship. And it is critical that you treat it as an important part of the exercise. I find that too many advisors just think, well, I'll get the clients to send me in the information and I'll start the planning process. And you've missed the most important part of the process. But first of all, and I've worked with a lot of advisors over the year, training and developing. And one of the things I find is that we tend to let this lapse into a fill in the blank exercise. And it's not a fill in the blank exercise. In fact, I've found that over the years that even though I have a fact find sitting in front of me with all the blanks staring at me, and I know I need to fill them, most of them in, most of what I write down is on the back of the page or on a blank sheet somewhere because it didn't come up in the right order or it didn't come up in the right way to stick it in one of those boxes. So I think that what you need to do is recognize that the most important way to treat the discovery process is that you want to have a conversation to try and understand and get to know this person and let them get to know you if they want to. But most of the time, the discovery process is going to be you asking questions and you asking questions about their answers and you showing a sincere curiosity and a sincere interest in trying to figure out who are you? What are you trying to do? I'd love to help you, but I need to know what that is. And so, sometimes people sort of separate two parts of the discovery process. One is the facts, like what's your name and age and how much money do you make, et cetera. And then what do you want to do? What are your goals? And the goals might be, tell me what your goals are. You don't have any? Great. All right, let's move on. But what I like to do is you need to weave those together because that's more natural. I want to have a natural conversation with my clients. So if they tell me in one of my questions, I'll say, have you any kids? All right, you got 2 kids. All right, tell me about them. I'm going to learn a lot about the kids in a few minutes here, but I'm also going to ask this question. How important to you is it that these kids get an education? Oh, it's really important. Who's paying for that? I am. How strongly do you feel about that? Like, are you committed to that? So now I'm learning about an important value that they have. And also I'm learning about their family, which is important to them. There's so much to learn. I will say, I'm rambling on a bit here, Sam, but I will say that one of the things that I noticed so early on is that when that conversation goes well, I can see the clients, the prospects have already become clients. And they will say something like, and this will be the exact words, I feel better already. And you think, what does that mean? I feel better already. Why did they not feel good coming into this meeting? But in fact, what they're saying is, I feel better because I now have somebody else that can help me. I've transferred some of the stress and concern I have about my financial future over to you. And I'm so happy about that.
I think that you just hit on a couple of things. It reminded me of one of the client meetings that I remember vividly. It's with a very wealthy person. They'd been introduced to us by somebody else, came in and sat in for a meeting, and an hour later walked out of the meeting saying this was the best meeting in his life. And the irony of it is, and I think I must have spoken for all of 5 minutes in that meeting, asked a couple of questions and let the individual answer and speak. And I think it's a tough challenge for us as advisors that want to help our clients. We think that in many cases that it's by asking those questions. But I think the way you said it, it's asking the right questions at the right time. But the bigger part of the challenge is letting the client speak, because I think interrupting with another question sometimes might actually cut the rhythm, and they were on a roll and they might have actually revealed a real important nugget that is critical to the advice that you might give.
You're absolutely right. It's definitely an art. And that's why people make such great advisors, because they're good at having these conversations and help at, trying to learn about people. I think another mistake that advisors make, it just rolled through my head, but this is so common. Advisors if you spend any time trying to convince selling yourself, you're going in the wrong direction. And it's so common for an advisor. The first 10 minutes is, we've done this, we manage this much money, we're this great. Like, look at me, how powerful. You're sinking rapidly. Mm-hmm. And it's hard to dig out of that. Mm-hmm. So don't talk about yourself at all. You said it. Let the clients talk. If the meeting is 90% the client talking, it's going to be a good meeting.
100%. And ask them about the things that really matter to them. I think you talked about the kids. Often I found business owners, if you ask them about their business, how they got into it, what their early years, etc., are, they'll wax lyrical about it because it's something that's
Yeah,
passionate. And I
absolutely.
think, first of all, it creates the trust and comfort level. But I think you hit the nail on the head. It also allows the advisor to understand what the priorities are, not just the values of the client, but what the priorities are. Because the
Yes,
reality is that as an advisor or as an investor or as a client, you're going to have to make trade offs. And I think understanding those priorities and values for an advisor is critical to help them kind of make those recommendations that is consistent with those values and trade offs of the client.
absolutely.
Along the same themes, I think you and I share a similar view on the importance of a detailed discovery process. Obviously, this takes time. Obviously, this takes a bit of art. Obviously, it takes a bit of comfort. What do you say to advisors that, with all of the administrative and other burdens that's there today, what do you say to an advisor that yes, this is a good idea, but it takes too much time?
You talking about the discovery process
The
again, or
discovery
financial plan?
process, the discovery process. Or financial
Yeah,
plan, but both of those, I think, which are two sides of the same coin. A financial plan is a part of a discovery tool. It's not all of
yeah,
it, but it's part of
yeah.
it. But both of those take time and effort. And for advisors that may not have built their practice around this deep discovery or a financial planning kind of mindset or philosophy, they might be intimidated thinking that it takes a lot of time to do this for each client, and they don't have that time. What would
That's
you say
true.
to that?
Well, first of all, it takes a lot of time, but it speeds up everything else. So you're going to save time later by doing the right thing first. And you know the fact finder or the discovery process. Again, I think I've said it all. I won't repeat myself, but it is the most important meeting because you are going to the advice you give is now going to have significant value to this client. You don't have to, one of the things that we are trained for early in our lives, and I started out in the insurance business, so I was clearly trained in this, is how to sell whatever it is you're selling. Well, what am I selling? I don't make money on financial planning. We don't charge a fee for that. So I have to sell the client on, we can help them. They'll move their assets to us. I'll make money. So I'm selling investments, aren't I? But I don't want to be selling. I don't like selling. It's not in my nature. I don't think it's in anybody's nature. So how have I avoided that all these years? Well, simply because the advice I give resonates so well with the client that they're like, yeah, this is exactly what I want to do. And it might not be in my wheelhouse. I might be putting them into mutual funds or seg funds instead of stocks and bonds because that fits their personality. But when it's a fit, it's a great, it's just so easy. It just happens. I've had clients that basically said, look, I want you to look after my investments at the end of the fact find meeting. Like, I haven't told you what we do yet. No, but I trust you because you know me.
I think you hit the nail on the head. I think this business is all about trust. And the sooner that you can build it, and the deeper that you can build it, the more that everything else just falls into place in terms of what you do, what you suggest. They believe that you have their best interests in heart. And they're less likely to react or overreact because the market is behaving in a strange way as it is want to
Yep.
do, right?
Yep.
So I think I totally agree. There's a I wanted to ask you about something else. There's another recent article by an industry expert that said that behavior is and always will be the final frontier. Now, I'm obviously biased because I agree with that sentiment, and much of what I've written is along these lines. But I would love to hear your thoughts and your experience with your clients.
Well, I obviously agree as well based on what I've just said. Behavior is, I think, one of the most important factors in determining success for an investor. And I think, we're human beings. We are unpredictable. We're easily influenced. We act more on our emotions than on anything else. How can anyone deny that behavior isn't a factor in how our investments our investments results. And unfortunately, our emotions, we're basically hardwired to do investing wrong. Like we're hardwired to make mistakes. So if an advisor isn't paying attention to behavioral issues or talking about them, then they're not serving their client, because their client's going to be their own undoing. Unfortunately, and my big thing with respect to this whole issue is that quite often, and Sam, you know this, you've been in the industry a long time, quite often the appropriate behavior with whatever's going on is happening is to do nothing. So more often than not, I feel like I'm asking people to hire me as their advisor so I can help them do nothing. It just seems like, wait a minute, I didn't like the way that sentence sounded. But I tell people that up front. I say, what our job really is here is, first of all, figure out who you are, put you in the right investment portfolio or investment products, and then help you navigate tough times ahead, because there will be tough times ahead. Make sure that you do the right thing at the right time. And almost always, that thing is going to be nothing. So don't be surprised when I say, hey, there's nothing to do. I think, there's an interesting quote. I think it's somebody named Warren Bennis, who said that the factory of the future will have just two employees, a human and a dog. The human is there to feed the dog. The dog is there to make sure the human doesn't touch anything. And I think, I don't know if I'm the human or the dog in that story, but I know that that's the story that applies here. Like, you need my help because I need to stop you from doing stuff.
I love that story, and I'm going to quote it now. But look, I think you're right. Like I've read this before, and I agree with it. The job of a good advisor is not to beat the market. The job of a good advisor is to help the client beat themselves. And I think that's essentially what you're saying, right?
Yes.
As you say. Yes. I think it was the French philosopher Blaise Pascal that said all of humanity's problems stem from the fact that they cannot sit in a room alone quietly. And I think that applies to investing. I think there's a temptation to want to over-egg the pudding, as they say in Britain.
Absolutely.
And in many cases, if you've done your homework, if you've worked with your advisor, built the plan, built a long-term investment strategy, you're rebalancing on a regular basis. And if your personal circumstances change, maybe you're making a dramatic shift in your strategy. But otherwise, you're just watching the world pass by, going and enjoying life and seeking happiness, as we talked about earlier, and not worrying about what the market did yesterday or what the Fed's going to do tomorrow, right?
Yes. I like to tell people that I think most of us, not all of us, certainly, most of us have a bias to action. We want to do something. And I always say, our philosophy is that we have a bias to inaction.
It's great.
Tough one to take, but
I think part of it is that's where your philosophy works. If the client has an action to bias, what they need is somebody that is going to counter that tendency, right? And so to kind of show a mirror to the client to say, okay, you remember what you said, what was important to you, what was there when the market wasn't in free fall, et cetera. So what has changed right now, right?
Yes.
So we're in agreement that behavior or helping clients manage their behavior is a critical component of advice. And I certainly believe it's the future of advice. How do you do that? How do you think an advisor can help their clients manage their behavior? If we talked about discovery being an art, I would say behavioral coaching is an art in terms of being able to know when to intervene to your client, how to intervene, how to kind of gently remind them that the plan or the action that they want to take isn't in line with what they had said. How do you think an advisor helps that client, and what can the industry or firms or the different bodies do to help train the next generation of advisors to get there?
Wow, that sounds like a better question for me to ask you than you to. But because you're much more of an expert in that area. But I think, first and foremost, Sam, I would say that we need to, part of the discovery process, if we could go back there, needs to be to try to develop an understanding of your client's personality. There was a book written in 1981 by Kathleen Gurney called "You and Your Money Personality: How to Make It Work for You." She then created a psychological profile tool that I have used since I started in 1996. And we still use it. It's called Money Max. It's not a plug for it. She doesn't own it anymore. She sold it, but it helps me lift to the surface a conversation around some of these issues. How much in control do you want to be? What are you going to do when the markets crash? How do you feel about is money coming to you, or do you have to go get it? Is it a dog eat dog world? So you start to give the client's personality some shape. And the reason that's important is because I think what many advisors do is they just impose their personality on the situation. And we can't do that. That's a recipe for disaster. The only way that works, and I know advisors do this, is to keep finding people that match your personality. And advisors who narrow their specialization, who have kind of one portfolio and it's a one size fits all, that's what they've done. They find lots of people that like that, and then they go. But if you're working from the framework that we've worked from, that we want to help as many people as we can in the most profound way possible, regardless of what their personality type is or how much money they have, then you need to be adaptable. You need to adapt to their personality. So you need to say, okay, I need to first understand what your personality is all about. What's going to scare you? And what do I need to be aware of when you call in and say, I'm panicked, I want to get out of the market? I want to be able to go back to a conversation that I had with my client and say, okay, we knew this was coming, right? Like we saw it. So we put you in this portfolio specifically because of that. And look how well you've done compared to people that are in a riskier portfolio. And that will recenter that whole dynamic between me and them. I'm not imposing my ideas on you. I'm following your personality. I think that's how it's worked for us. I don't know that everybody could do that or everybody wants to do that, but I think that finding out a client's money personality and however you do that is a really important part of the discovery.
I'm in total agreement. I think it's not easy, and we're not asking advisors to be armchair psychiatrists or anything. But
No.
I think the critical thing, as you say, is as part of the discovery process, it's to treat the person on the other side of the table as something other than a portfolio or an insurance policy. It's to understand the person behind it, because that person behind it is going to have their hopes, fears, dreams, their past experiences, their past mistakes, all of those things that are coming to the table with them each and every time that they're talking with you. And I think it's the better you can understand it. And again, as you said, it's an art, not a science. The better you can understand that client and all of the different facets to that client, I think the better able, not only are you able to advise them, but the better that you're able to build a trusted relationship. And I think, look, I wholeheartedly agree with you. This takes time. There's no question about it. But my
Yes.
experience, and I think what you said, your experience is that it pays off in spades because you're not having turnover of clients. You're getting a greater share of the wallet of that client. And they're the
Yes.
first people that are volunteering referrals to you without asking for it, because they say what the experience that I've had with Bill and Bell Financial is so amazing that they're wanting to tell everybody else that has anywhere near the similar type of problems about it. And that's the best type of business that you can get, is this warm referral from a very happy client.
Absolutely right.
Awesome. This has been great, Bill. We're coming to the end. So I have a few final rapid fire questions, if I may, which I ask all of our guests. So if you're ready, number one, what is the most important lesson you've learned over the years?
I'm not as important as I think I am. That one of the keys to growing a business is to let go of a lot of responsibilities, let go of a lot of tasks, and by letting go, I mean let them go. And you think, oh, I can't do that because only I can do that. Well, you know what, Sam? There's nothing that only I can do.
I think that's a testimony to the fact that Bell Financial is continuing to grow, and you've got a next generation of advisors that are taking what you've built and taking it to the next level. So that's a great lesson.
There you go.
I think it's true for all of us.
Yep.
We all think we're replaceable. Unfortunately, we all find out sooner or later, whether we like it or not, that that's not entirely true. So,
yeah.
Number two, finish this sentence. I wish I had known.
that you were going to ask this question. Obviously, I was prepared for that, wasn't I? There's something about that question that I find difficult to answer. It's because any answer is an indication of I'm not happy where I am right now, and I am happy where I am right now. So what would I change? But I guess here's the financial advisor answer. I wish I'd known that I should buy. I put all my money in Amazon in 1997. That's what I wish I'd known.
Well, maybe I will share how I would answer the question, and exactly the same way that you put it. It implies, and it's not meant to imply, what do you regret? But there are things like we talk about happiness. I wish I had known that perhaps to not let things worry me as much in the past, as the things will all sort out.
That's a
right?
good answer.
Like it's things,
That's a good answer.
that you can put this into perspective way more down the road than perhaps you were at that point. I think that's a human condition. I think one of my favorite quotes is by the Danish philosopher Søren Kierkegaard, that said, life must be lived forwards, but can only be understood backwards. And every day now, I'm understanding the truth of that quote, etc. Like things that I didn't understand 20 or 30 years ago, I think I have a much better perspective on it and how it fits into the overall tapestry of my life. So no regrets, but having a little bit less in the sense that things have to happen in a particular way, in a particular time, at a particular pace.
Yeah. Thank you, Sam, for answering the second question for me. I appreciate that.
So then I'm going to leave the third question to you then. So what do you think is the biggest pain point for most advisors, and what advice would you give them?
I think the biggest pain point is probably finding new clients. I mean, any advisor who's trying to grow their business, and that's virtually all of them. Many of them struggle with, how do I get new clients? What's the best way to find new clients? And I would say, you know what, you just have to help people in a way that surprises them. You have to have that discovery process and that I'm really going to look out for you process that actually makes them think, this is different. This is not what I expected. This is fantastic. And then they're going to push clients to you. As simple as that.
I think that's such a great comment. I've heard this a lot, having worked for bigger firms, et cetera. We talk about client experience. We talk about creating a great experience. And I think you hit the nail on the head when you say create a positive surprise. It's one thing to give them what they were expecting. It's another thing to go above and beyond and give them something that they weren't expecting in a positive way, not in a negative way. And I think you're right. I think when you're doing that, when you understand them better, again, it's a theme that's we've woven through our conversation today. When you understand them better through a financial plan or deeper discovery, you're in a position to be able to give that pleasant surprise that you remember something about them. You give them timely advice on something that they're worried about. You're able to remind them about their values and priorities, et cetera, when they're coming to a decision. And I think done the right way in the right time, not every meeting, but you are going to be able to be in a position to give them that positive surprise, which is only going to pay dividends for you in business building. So, Bill,
absolutely,
this has been great and an interesting and wide-ranging conversation as always, and with lots of great insights and drawn on years of success and experience. So, thank you. If listeners want to learn more about you or find out about your work, where should they go?
Best place is to go to our website, bellfinancial.ca. You will see when you go under, who we are, you'll see my picture. You can see my bio. You can also see all of our blog posts and various things that I've written, our newsletters. So you can learn lots about me there.
And assuming they can find your books there as well, right?
You know what? I'm not sure, Sam, if they're there. I know that one is no longer in print. It's like it's not available. One you can buy, but if you're interested in finding out about my books, just send us an email through that website, and we'll definitely tell you how you can get one. We have a few here we can awesome. Distribute.
Bill, once again, thank you very much.
My pleasure, Sam. Thank you for inviting me.
As always, it's fun talking to Bill Bell. My 3 takeaways from our conversation are the following. 1. A client-centric approach. Bill emphasizes the importance of understanding the client's personality and goals during the discovery process. Advisors should adapt to the client's personality rather than imposing their own ideas, building trust and rapport. This is such a key insight, and part of understanding that client's personality is to do a deep discovery. Ask questions, wait for an answer, and then dig deeper. Number 2, behavioral finance. Bill highlights the significance of addressing behavioral issues in financial planning. Human behavior, emotions, and biases can significantly impact investment decisions. Advisors need to help clients navigate their emotions during market fluctuations. I always say that the job of a good advisor is not to beat the market, but to help a client beat themselves. Number 3, simplicity and doing nothing. Bill's philosophy involves simplicity in financial planning. He often finds that the appropriate action during market turbulence is to do nothing. He helps clients understand that their long-term goals can still be achieved, even if the financial plan doesn't go exactly as predicted. This is gold, but only works if the advisor has built trust and confidence with the client before the market volatility. Thank you for listening to this episode of the Future Ready Advisor. Please be sure to subscribe to this podcast, and if you could rate it while you're at it, I would appreciate it. Visit samsivarajan.com where you can download a behavioral coaching guide and find other resources. Join me in the next episode for more tips and tools to make your practice future ready.